When you look
My
at
pleasure.
Robinhood and the meme stocks, does this actually kind of put fear in Wall Street bankers? Because we don't exactly know what this will become in 6, 7, 10 months from now.
So yes and no. I don't know if Robinhood is really going to frighten Wall Street bankers, but the innovator's dilemma is you must constantly be prepared for a faster, nimbler, quicker, cheaper competitor that can come and eat your lunch. I imagine Jamie Dimon isn't afraid of a lot of things. Cybersecurity is probably something high on his list, but the possibility of some upstart coming along and grabbing a chunk of their business has to be part of their strategic planning. So you always have to be aware of the next gen coming after you. But I'm not sure anyone really sees Robinhood as that threat.
What do you think, Barry, in terms of this, flexible working from home? Does it really, a lot of Wall Street trying to also pay some of their junior bankers a little bit more to make them loyal? Is it really all about competition and just paying your bankers enough to keep them where you want them?
So on the low end of the pay scale, it's all about wages, and they've lagged for a long time relative to things like profitability and productivity and inflation. On the higher end of the scale, it's really flexibility that matters. When Ritholtz Wealth Management launched in 2013, we set up virtually. We have staff, 40 employees all around the country now, and we've always been a virtual hybrid. Come into the office, don't come into the office, it doesn't matter. Just do your job. So the pandemic work from home situation, we were built for by accident. And we found it to be a very effective tool for attracting and retaining talent. Now, it's a very different story with 40 people versus 4,000 people, but it's pretty clear white-collar professionals want flexibility to control their time, their family life, their, who's looking over their shoulder. And we've all learned over the past year, it's not unproductive to have people from working from home. If anything, companies get more work out of people because
especially at a higher level, right, Barry?
Yeah.
I mean, once you've gotten older, once you're tired of being in the sort of inner office rat race at your cubicle, you want to be able to have a little bit more optionality. I wonder how it's going to hit the league tables, right? Right now, Goldman Sachs, JP Morgan, Morgan Stanley, they're all right at the top. But the question is, do you have to have your workers come in, your executives, your bankers come in every day to stay there? Or can a flexible work schedule, topple the big guys?
Think about what you just said about those league tables. If I'm a banker working 80 hours a week and or 100 hours a week, and some 10 or 20 hours a week are me getting up, showering, shaving, putting on a suit, getting on a Uber or a train or whatever to get to the office. Hey, if I could spend that time more productively, at least a couple of days a week, that's going to only add up to more business over time, or at least that's the argument being made for, hey, it's better for the company if you let your staff, they know what they need to do and they know the best way to do it. Give them the tools they need, trust them, and get the hell out of the way. Bigger banks tend not to love that sort of philosophy of letting employees figure out the best way to do their job.
So, by the way, Fran was right. When we were on a conference call for the show and somebody said, how come Tom gets Barry on surveillance? And our producer said, we can get him too. We were like, yes. For me, because I love talking cars with you, and we got these amazing car sales figures out yesterday, Barry. I mean, a gain of 40 or 51% for the month of June for U.S. car sales. Just unbelievable year over year. Obviously, people are buying more trucks than anything else. I don't know what that is, like a electric.
That's the Lightning, the Ford Lightning.
Exactly. But you know what I was thinking is, how are they going to keep up these gains if they don't have cars on dealer lots?
So first, let's put these are sales, not deliveries. So let's keep that in mind. Secondly, go back a year ago, Q2, Q3 of 2020, nobody was running to the car dealer in the midst of a pandemic to buy cars. So year-over-year basis, these are incredibly easy comparables. And so you're seeing a bit of a surge that's making up for lost ground. And you're also seeing a lot of people, I don't know about you, my expenses plummeted last year. And I started looking around at things, toys I wanted to buy, because I just wasn't spending the money I normally spent. And so
like
there's a lot of cash in bank accounts.
So, Barry, car prices are going more up. My wages aren't necessarily going up. What do you think is the biggest headwind in the labor market right now?
So depends on where you're looking in the labor market. There's no doubt that there's a skill shortage on the technical side. Some of the things that were done by the last administration to reduce immigration has not helped our case with skilled STEM potential employees, science, technology, engineering, math, from places like Korea and China and Vietnam and all over Asia and parts of Eastern Europe. Those are enormous feeders into U.S. technology strength, be it Silicon Valley. The stat I saw is something like half of the C-suite is either first or second generation immigrants to the United States. So we're not helping ourselves by keeping those folks out. And then it's been pretty clear how long wages have lagged at the bottom end of the scale. And I know it's only an anecdote, but I wrote about an ice cream shop in Pittsburgh. The Pittsburgh Gazette is who first reported this. And they doubled their rate, their normal hourly wage from minimum wage of $7.25 up to 15. And instead of getting 2 or 3 applicants, they got 1,000. So it's pretty clear wages are driving everything at the bottom of the scale move up, and it's all about flexibility, the ability to take care of your kids from home and to control your own time.